Will governments soon be able to take control over all your money? Okay, if there is a talk in the crypto space about CBDCs, the words total control come to mind first. But why is that? Why do some governments gladly embrace it while others strongly against it? What threatens us, ordinary users, and what does cryptocurrency have to do with all that? Anyways, let's skip the fear part, well, at least for now, and calmly discuss all these topics in today's video. First of all, let's see what CBDCs really are, whether it is a good or a bad thing, and what you should do to protect yourself from digital slavery that is probably coming to us. So, let's get it on. Okay, CBDC stands for Central Bank Digital Currency. It is a digital form of a country's national currency that is issued and regulated by the central bank. Unlike physical cash, CBDCs exist in digital form and can be used for electronic transactions. These digital currencies are created using blockchain or other distributed ledger technologies, allowing for secure and traceable transactions. Given that we live in a digital era, of course, money might consider such a transition too. And indeed, CBDCs offer several potential benefits. For example, increased efficiency in payment systems. They also reduce transaction costs and enhance financial inclusion, since digital transactions are accessible to a broader population. Also, as transaction records are completely traceable and tamper-proof, CBDCs could help battle tax evasion. All in all, CBDCs offer improved control and monitoring by central banks over the monetary supply and financial transactions. So, what do you say? Not that bad, right? But yeah, what about that last part about improved control and monitoring? What's that about? You see, in this world, it just happens that when there is a great talk about some good deed, good idea, about some bright future, smart cities, digital IDs, CBDCs, and world coins, by the way, check out this video. So other dystopian technologies, in reality, it's good, later becoming evil. And when it comes to CBDCs, one question usually comes into mind. Does the state want total control over the finances of its citizens? And yeah, there are just countless concerns and potential threats around CBDCs. So let's just name a few. Privacy and surveillance control. CBDCs could raise concerns about individual privacy, as central banks would have the ability to track and monitor transactions more closely than it was with physical cash. This level of surveillance could potentially compromise personal financial privacy. Besides, excessive monitoring and surveillance by authorities potentially can lead to abuse of power. For example, the government could just say, you can't spend your money like that, and just freeze it, taking control over where you shop and what services you get. Next, financial stability. The introduction of CBDCs could disrupt traditional banking systems. If CBDCs are widely adopted, people might choose to hold their money directly with the central bank, reducing the amount of deposits in commercial banks. This could potentially impact the bank's ability to lend and potentially affecting financial stability. Besides, some say that CBDCs will prevent bank runs, but in reality, that means that they can freeze your money in the time of crisis. And do you want that? Financial exclusion. While CBDCs aim to enhance financial inclusion, they could inadvertently exclude people who lack access to digital devices or stable internet connection, thus creating even more inequality and social layering. AML and KYC compliance. While CBDCs offer traceability that can help combat money laundering and other illicit activities, they also raise questions about anti-money laundering, AML, or Know Your Customer, KYC. So, how such regulations will be implemented without infringing too much on individual privacy? Of course, these things were always a problem in the crypto world, but now the real world is going to have it too. So how about that? Next, cybersecurity. Let's admit it. Digital currencies are susceptible to cyber attacks and hacking attempts. We see this quite often in crypto, and CBDCs are no exception. A successful attack on CBDC system could have severe consequences, like loss of people's money. This all could lead to a complete loss of trust in the national currency, switching to other ones, or even immigration. Next, operational challenges. Implementing and maintaining a secure and efficient CBDC system, of course, involves complex technological, security, and operational challenges. Central banks would need to heavily invest in robust systems to ensure the reliability and security of these digital currencies, meaning you might pay more taxes. Besides, as CBDCs are controlled by central banks or governments, there is always a human factor that will be involved. If proper safeguards aren't in place, CBDCs could potentially be used for corrupt purposes. Monetary policy implementation. CBDCs could impact a central bank's ability to implement monetary policy effectively. If CBDCs are designed with features that allow interest-bearing accounts, for instance, individuals might shift funds more rapidly in response to changes in interest rates, potentially amplifying the effect of monetary policy. And of course, international implications. The adoption of CBDCs could have an impact on international financial systems, as the role of traditional cross-border payment systems might change. It could also impact the dominance of certain international currencies and overall the dominance of countries in the international arena. Speaking of which, the study shows that around 130 countries, representing 98% of the global economy, are exploring the idea of central bank digital currencies. Several countries, including China, Hong Kong, and India, have already launched their digital currency pilot programs, while others are looking forward to launching them too. The latest countries to enter the CBDC race are Russia, Japan, and Ukraine, and each of them plans to launch their pilot programs before the end of the year. So yeah, the global CBDC race is hotting up. Also, with Western countries and the US actively rolling out their CBDCs already, it seems like these countries may not be as free as perceived. Of course, we need to consider social factors as well. For instance, Western countries have a lot of aging population nowadays. And delving deeper into this topic might actually show the true reasons behind CBDCs and why they are gaining so much traction these days. But as it turns out, the idea of going where you are treated best is not longer applicable, as there are limited options for individuals seeking more control, freedom, and overall happiness. People are not blind. They see that CBDC's pros don't outweigh the cons, so you can't understand the fear. And there's this cloud of apathy around CBDCs as people feel that they can't do anything about it. But actually you can. Despite fears and defeatism, there are still some ways to protect oneself against government control. First, assess your country's risk level based on financial dependence on organizations like the World Bank and IMF, as this will determine how soon the digital dystopia will arrive. Also, ask this question to yourself. Does your government, where you live in, want more control over you and your money? Corruption and lack of infrastructure may hinder implementation. So protect yourself with alternatives like cryptocurrency, cash, and gold. The thing is, you must be able to store and transfer wealth that's outside of that dystopian system that is being created. Second, ask yourself a question. If your country is even capable of implementing those dystopian technologies. The technology might be rolled out, but its adoption is not imposed. Adoption doesn't mean use. Besides, culture matters here. Countries and governments are different, and you want to find one that suits your needs. So you can try using multinational services remotely, or just travel around the world and use it really, or just be ready to relocate if necessary. I mean, the study might be wrong, and it's not even half of the countries that exist in the world. So definitely, some countries are against that whole CBDC idea. Just find one that really suits your needs. Overall, all these factors like declining physical cash use, Bitcoin success, and big tech threats, and also this geopolitical tensions, all have accelerated the global push for CBDCs. Although the United States and other countries lag in the digitalization race, the overall momentum towards CBDCs hints at a digital future for finance. Of course, in good hands, CBDCs do offer various benefits, but also come with potential threats and challenges that need to be carefully addressed to ensure that the benefits outweigh the risks. Policymakers, central banks, and technologists need to work together to develop CBDCs that prioritize privacy, security, financial stability, and the needs of the broader population. After all, what do you say? Money buys the access, but can we really pay the cost with that CBDC thing? Let's just stay tuned on that topic together.